Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Shawn Hackett of Hackett Financial Advisors, and we closed mostly lower in grain and livestock futures trade on Friday. Shawn, let's start off talking about the grains. We had a nice day on Thursday, but no follow-through gains on Friday. And why was that? Did we run up into chart resistance, or in the case of corn and beans, is the big yield just too much of a headwind?
Yeah, I think it's just too much of a headwind. There's too much fear going into the Tuesday WASD report. You can get some technical bounces on a short-term basis like we saw on Thursday, but to get follow-through, you need either clear and present danger on weather, which we really don't have, or you need the USDA to say that these very high yield estimates that some outfits have been putting out are not correct.
Do you think that August will be the biggest yield that we see? I mean, you already have trade guesses at 184 for yield for the report, but we've been talking about up to 190 for the last few weeks now.
Yeah, there's two reasons that I believe we are going to print the highest yield for the year here in August. The USDA is going to do that. One is the fact, especially in corn, is that when you plant the second highest number of acres we've ever planted, that means a lot of fringe acres are getting in the ground, and those acres, even if the weather is good, are going to not yield those big time yields that you can get in Iowa and Illinois and such. The second reason is we've confirmed an historic warm night, July of 70 degrees or higher, 15 days or more. And it looks like we're going to get another round of warm nights here in August, which is also a strong indication that the statistical yield by the USDA in August tends to overestimate what actually happens when those agronomic data starts getting factored into yields. And I would say argue the same thing with soybeans, is that a warm night August does tend to affect pod fill and bean sizes. That kind of takes the edge off the yields in those years like 2010, 2011, 1999. There's quite a few years that we've seen this happen. And so if history is going to repeat, as we think it will, we think could be the high yield.
So if you think we're trading a 185 yield already on corn, does that imply that if we get something below that from USDA on Tuesday, that you could bottom the market at that time or not? Or
Yes.
is it too early?
No, if we come in below 185, I mean, let's say we print a number of 183 and change. Let's say, to 183 and 184. I think the market would rally very strongly on that. And I do believe that would be, in my opinion, given that they like to overestimate the August report in a year like this, to me, that would likely have suggest that $3.95 to $4 low, assuming we don't change that on Monday, before the report, that we would that would be the low, that would be the turning point, that the market can now look at a post-harvest rally. And if we get any kind of a trade clarity with China, which we've been lacking, and they indicate anything that they might buy a few soybeans and corn from us, that could be an additive positive effect if the market gets excited that they've dialed the worst yields in already.
Yeah. So soybeans kind of hit some chart resistance as well and backed off, but it's not just about yield there. This market is also concerned about China demand, isn't it?
Well, it really is. I mean, for a second year in a row, we're looking at mammoth differentials between higher priced Brazilian soybean cash prices versus our cash prices, because China continues to prefer buying their soybeans from Brazil than buying from us, which means they're getting the economic value and we're not. And that has to change. We need to get a greater equity or a greater balance between the two countries' supplies, so that we can see a more commensurate price relative to the demand for the product from China. And that's why this lack of trade clarity with China is really, really debilitating to the soy market specifically. Corn, I wouldn't say we're totally reliant on China. We're not. We're not totally reliant on China for exports, but in soybeans we kind of are. And without it, we're really handicapped. Even with the renewable diesel increase, crush demand we're expecting for next year, that's a tough headwind to overcome, at least right now.
Yeah. And of course, the president says we're probably going to extend the tariff delay for another 90 days past August 12th. But we need a deal, don't we?
Yeah, delay is one thing, meaning, all right, it's better to have a delay, right, than to have tariffs go up to 100% again, right? But a delay doesn't mean a trade deal. Delay means, all right, we have a window for a trade deal, but the market is so skeptical right now. And it's so non-believing right now that we're going to have anything come from this, that even though it's positive to have an extension of the tariff window, the market's not reacting to it because it just doesn't believe it's going to happen. We did see this kind of lethargy in psychology during the first presidency, and it might be a repeat where everybody doesn't expect it, not trading it, and then all of a sudden we get a tweet in an evening where he says we have a deal and they're going to buy 10% more corn for the next 3 years, and all of a sudden the markets turn on a dime and we never look back. I know most people think that's almost impossible. I think the probability of that is far greater than many would suggest, given what I think are the symbiotic relationship needs of China needing our AI chips and we're needing their rare earth metals for our AI ambitions. So I think there could be something there, but obviously printing a lower yield number than expectation on Tuesday would go a long way to helping that cause.
Average trade guess is about 53 bushels per acre. Are we trading that already? Do we have that priced in?
I believe we do. I really believe that we're trading that right now. I think last year, if I'm correct, we went down to $9 and a half, $9.50, I think, on November soybeans. I believe it was around there. Like corn, $3.85 was the low last year. I'm in the camp that says we don't necessarily have to fully retest those lows. I kind of feel with a lot of the weaker dollar, the increase in fiscal spending, a lot of money printing that's been going on around the world, that we might find ourselves bottoming here at a slightly higher level. And obviously a USDA report coming in below expectations on Tuesday could be the recipe for solidifying a slightly higher low than we did last year, and then creating that post early harvest rally that oftentimes catches the market off guard.
Gotcha. So the wheat market, we're just off of contract lows here. We've had pretty good demand. So why can't that market get up and rally? Is it just because you can't rally if corn is hitting new contract lows too, or what is
it? Look, right now wheat relative to corn is on the cheaper side, so wheat can rally if the market feels there's a reason to do so. But I still just feel that the market's looking at this very large KC winter wheat crop and saying, yeah, we have strong demand, but we need that strong demand because look at these big supplies. We need to move this grain. And even though, Russia-Ukraine production looks similar to last year, which was a very poor crop, and Ukraine looks very, very disappointing compared to last year. The corn crop looks not so good. It just seems that the market cannot get its head away from focusing on large supplies in the U.S., and that's has to change. We need to find a reason to change that narrative that all that matters is the U.S. supply equation. We haven't been able to do that yet, but that's once again what makes potentially this Tuesday USDA report on all the grain market fronts a potential catalyst for changing that narrative and maybe bringing some other variables into the mix.
Pretty wicked day on Friday in the cattle market. We had limit down moves in the feeders and, of course, a little bit lower cash, not a big test. Do you think this is the top of the market? Will we see follow through selling?
This week at the highs, the relative value of cattle to all other commodities going to 1945. It's called the relative value. It's trying to determine how expensive cattle is in relation to everything else, was the highest it's ever been. Feeder cattle is also hit the highest relative values ever, and not by a little, Michelle, by a lot. And so when you have a market historically overvalued to this degree, that in times past took lower overvaluations to top out, a violent reversal, technically, of what we call a bear reversal, where you break to new highs in the middle of the week and then close below that in a violent fashion on a Friday, has the potential to be a final high and a follow through to the downside, we would really, really follow and watch and pay attention to the 220 support level that live cattle has bounced off a couple of times. If we follow through next week and we break 220, it's going to solidify in our minds that this reversal may have just placed the final top in this historic move higher that we've seen from the COVID lows that we had many years ago.
The bulls are going to argue we've had 6 or 7 key reversals that we've negated already, though.
And they are, of course, correct in stating that. But one of these will be that, and relative value prices in cattle at those times were not as high as they are today. So to me, it's the overvaluation that we see today that is getting me more comfortable and more confident that this reversal has the potential for having more legs to it than when we made those reversals at lower prices that were nowhere near as egregious as they are today.
Always a pleasure to visit with you. Shawn Hackett with Hackett Financial Advisors. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.